All right, guys, welcome to the, newest installment, I guess, of not the weekly update, but maybe the monthly update. Landon McKernan, Mark Cassell, we're going to go over some trades, what we're seeing in the market, as well as just talking about what our summer activity's been like as well. But just rolling through a few of the most recent trades that we did want to highlight. First one was actually one of the biggest deals we saw of the summer, and it was the Arizona Republic sale leaseback. I think Atlas actually picked it up. It's about 300,000 square feet and sold for $38 million. It was a sale leaseback, like I was saying, zone A1, 30-foot clear height, and this is around that Deer Valley industrial submarket as well. The next one was an older building, not as functional, I would say. It's off 36th Avenue in Phoenix, sold for about $57 a square foot. Sorry, $52 a square foot at $3.3 million. Like I said, not as functional. It does have fire sprinklers, but it does have that very old school arched roof. The next one, Landon can probably touch on as well. It's in a submarket that he works in quite a bit off of 40th Street, but I'll let you kind of, talk about that.
Yeah, this building on 40th Street was a nice size. It was just under 10,000 square feet, traded for $242 a square foot. So we're still seeing really high price per square foot on buildings that could be occupied by a user. Ended up coming out to $2.2 million. It was a newer build for that area in 1985, had 15-foot clear height, well built out office. I know there was some recent renovations on that as well. 3 grade level doors, and was on just under an acre of industrial zoned land, and again sold to a user.
Cool. Honestly, with trades, what we've been seeing recently and what we did kind of want to highlight as well is just where we seeing deal velocity. This is something that a lot of people ask, and I mean, what are your thoughts? I'm seeing a lot of deal flow under 5 million, and what are your thoughts on that?
Yeah, so we're seeing a lot of deals still getting done, especially ones that could be occupied by users. Still a lot of demand on that front. I think in terms of investment deals, people are really slowing down, underwriting them, and making sure that it makes sense with the current interest rates.
Yeah.
I know there's been a lot of shifting, especially over the past couple of years with rates going up, actually 11 times in the past 12 Fed meetings. And that's played a huge part in a lot of these deals just not making sense, especially if they've been on the market for quite some time.
Yeah. And I think that's what the most rate hikes we've had since 2001, or the biggest jump, right?
Correct. Yeah. So rates are the highest in just over 20 years now.
Yeah. And I know we do a lot of sale leasebacks, a lot of owner user deals. Why do you think pricing really hasn't fallen for user deals right now?
It really comes down to supply and demand. I mean, with all these companies coming in from California and other states, not only people moving here, but also companies coming for a better business environment. There's so many groups who have been on the sidelines looking for these buildings to occupy, but they're just not hitting the market in a way that allows prices to come down. And then also on the new construction side, we're not seeing a lot of building in that size range, in the, I would say, 5 to 50,000 square feet. A lot of the new construction, if you look around, is going to be big box warehouses, 100,000 square foot plus, and it's just really out of reach for a lot of these groups.
Yeah, that makes sense. And the question becomes, with the absorption of these larger boxes, there's only so many of those tenants to go around, and what's going to be happening as more and more of those projects do get delivered. But going back to deal flow currently, I mean, what we're seeing is a lot on the sales side under 5 million, like what we're talking about and what we highlighted today, with the exception of that Arizona Republic sale leaseback. Institutional investment deals are pretty much few and far between, but leasing activity, I feel like, is really active. There's a lot of absorption, a lot of moving around, and it's mainly that 5 to, let's call it 50,000 square feet as well. But those larger spaces are taking a little bit longer to backfill as well. But what are your thoughts on our summer activity as well as what we've been seeing?
Still seeing a good amount of people looking for deals. I know we're talking to investors every day who are searching really hard on and underwriting a lot of deals, trying to make sense of them.
Yeah.
Again, it just goes back to the increase we've seen in interest rates and the expectations of sellers that haven't quite met that jump in rates yet. And for these deals to make sense, obviously buyers are looking for positive leverage on the debt. So they're looking for cap rates that are generally higher than what we're seeing in interest rates. And just to share some numbers here, the interest rates we're seeing, we actually just got a rate sheet today, 6.3% to 7.75.
Wow.
For a lot of industrial permanent financing. And on the cap rates, I don't know about you, but I'm still seeing high 5s to low 6s.
Yeah.
Sometimes mid 6s, just depending on the deal and the area. And obviously, that math just doesn't add up in a lot of cases.
Yeah, it's just, where are these things going to pencil at the end of the day? And, one prime example is, this is a building, actually a trade that I should have highlighted earlier, but it's the Broadway indoor recycling plants in Mesa. Older, not as functional. This one was on the market for, I think, a while. Actually ended up selling for about $90 a square foot, which is, we don't really see that too often, but it was built in 1948, and they actually sold that for a 6.61% cap rate, which I think is pretty aggressive for not only the tenant that was in there doing the lease back, as well as the quality of the building as well. But it was a smaller deal at $2 million at the end of the day, but I think that's a really good case for the trends that we're going to start seeing later on with pricing expectations. But
I agree. Yeah, especially with the low inventory that we're seeing out there. It's been a really good time for a lot of these sellers to get below market cap rates on deals that might take a little bit longer to lease when that lease expires, or might require a little bit more CapEx, so to speak.
Exactly. Well, that kind of covers it for what we've been seeing over the last couple of weeks and catching up on summer as well. If you guys have any questions, feel free to reach out, and don't forget to like and subscribe.
We'll see you next time.